Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Friday edition of Benzinga's Pre-Market Prep. Spencer Israel, Joel Elconin, Dennis Dick. Tepid morning this morning. You kind of get the sense that everyone is just sort of holding their breath, waiting to see how this tariff thing will shake out with China. But we do have some news. We've got earnings. We've got this Uber IPO. So we'll talk about the IPO mostly, I think, with our guest today at 8:35. We'll be joined by someone who's been on our show a couple of times now. I guess we can call him our IPO expert, Eric Krull. He's the founder of Krull Asset Management, co-author of the Lifecycle trade. He'll join us at 8:35 to sort of break down, or at least put the Uber IPO in context. So between that, between the earnings, we got a lot to get to on our show. Let's jump right in, Joel. What's the word here overnight?
We got some red on the screen here, Spencer. We're down 18 handles at 2854.75. Pre-market low, 2852.50. The only thing we have down here, folks, is yesterday's low at 2836, and then we open up to the lower 2800 handle. Crude trading into green by 22 cents at 61.92. We got a wall here at 62.50. Let's call it 4 out of the last 5 highs, including today, right at that area. Gold in the green by a buck only, still 1270, 1290 trading range. Silver in the green by not much, 7/10 of a penny at 14.78. And don't look now, but Bitcoin has put 6,000 maybe in the rearview mirror here, trading up once again at 6,280. That's the Bitcoin futures. 62.80 up $215. Triple D, do I hear you lurking in the background?
Well, I want to, before we go to Dennis, though, I want to say, Joel, you seem concerned this morning about the Uber IPO. You seem concerned that there were 2 ride-sharing companies IPOing in the span of 4 weeks. Why are you so concerned?
Boy, I don't know. I mean, 2 ride-sharing companies. I don't know. I don't know. I don't want to get into my old bearish routines and everything, but it just makes no sense to me. 2 ride-sharing companies IPOing within a month and a half. I mean, I don't know. I mean, what does this say about the car industry? What does this say about transportation? I don't know. I just find it weird. It's weird that one did it, but now there's 2. So I'll be very interested to see how these progress. But I don't know. I don't know. Maybe some of the other old birds in here can comment. Just seems weird to me.
And then also real quick on this before we move on, but you brought up a company I hadn't heard of before, Medallion Financial. I bring the chart up, MFIN. I didn't realize that there is a stock you could get exposure to the taxi industry with and get the medallions, but apparently you can. I didn't know this was a thing.
Major rally here in 2019, and it was a reverse split candidate here. But, you would think that, with the Uber IPOs and the LYFT IPOs, this year, knowing this, the stock did do the reverse split, but it's had a nice rally. I mean, I can't say that cabs are making a comeback here, but it has had a nice rally.
All right, we just lost Dennis. What I'm going to do is take a quick break, and we'll get Dennis back here in a second, and we'll be right back with the show. Hold on 1 second, folks. All right. Should be back now. Apologize for that slight hiccup, but I think we're good to go. Joel, are you with me?
10-4, 10-4.
Let's get rid of that echo. All right. So we got Joel and myself. Dennis is going to see. Dennis keeps giving us weird instructions. First he says he's busy, then he says he's not, then he says he is. So here's what we'll do right now.
We probably could all use a break from Dennis today, you know.
We can all use a break from Dennis today. All right. Well, he didn't hear that. At least I don't think he heard that. But what we'll do here, you know what, Joel? Let's do this real quick. Let's get Dennis back.
Okay.
All right. We'll be right back again. As you know what? Here, we'll try it. We'll try it on the fly here. We're gonna do it on the fly. I'm gonna get Dennis back, and let's see if this works. I hope it does. Apologies for this, folks. We were off Skype and we're on Skype. Joel, are you with me? All right. We'll be right back, folks. All right, we're back now, and I think we're all good. So let's go into earnings. We have our IPO coming later today. We'll talk about that with our guest. Let's go into earnings, Joel. Let's start with Zillow here, since it's the biggest gainer I'm seeing in the morning here. Z or ZG, whatever your preference is. I'll go with the ZG. The Q1 EPS here yesterday, or their sales $454 million versus a $432 million estimate. The EPS, I believe, was a beat as well. Joel, let's run some technicals on Zillow.
Okay, I'm going to go with the ZG here.
Okay.
Looks like that, yeah, that trades a little bit more volume, trading up 562 at 39.19. This one is always a mover off earnings here. So let me see where we're trading. I did a little adjustment here on my time frames. And what I will tell you is we hit $41, and we hit $41 a couple times here. 41.10, we hit that after hours. We just hit 41.10 a little bit ago. So that's your resistance, 41 even, 41.10. The longer it takes to get to that level, I look for a little bit of a fade. This is basis ZG.
ZG. Why do you look at that over Z? Does it matter to you?
That was just the first one I typed in, and what I do when I decide of which one to look at here, I see that this one traded 2.5 million yesterday. The other one even trades more, traded 6 million. So I guess Z trades more. So basis ZG. I don't know. They're like the same price, so I don't know. Same levels, looks like the same stock to me.
All right, Joel, what I'm going to do is I'm going to throw to Dennis now, and I want you to join us via the Zoom. So I'm going to get rid of you, and I'm going to hop on to Dennis.
So what am I doing?
So go back into the Zoom that we were in before, and hop on Slack. Let's see, Dennis, are you with me? Dennis, are you with me? Dennis, are you with me?
I am here.
All right.
We're now using Zoom. We can see why the Zoom share price keeps going, or at least
up.
because it's a superior product to Skype.
Right.
We're gonna have to obviously just get over and just doing everything.
Well, I thought we had fixed it. You said we had fixed it, and I guess we had.
Yeah. So I went in and I had this fixed. So we went into Spencer, and it was nice. Went into a Microsoft forum. Found the exact thing. Somebody's complaining about Skype continuously dropping the calls, which happened to me 10 times yesterday, already 4 times this morning. So I'm like, obviously can't use Skype because it's going to continue to drop the calls on Windows 10. Did the fix, did the reset of the app, the whole shebang, and after 1 minute, dropped the call again. So that fix did not work, Microsoft. Whoa. Microsoft fixed your product. We are on to Zoom. We're on to a product that works. Zoom works. I've never had the call drop in Zoom or the webinar drop in Zoom.
Well, what you had missed here. What you had missed was we had just done Zillow. Do you have thoughts on Z or ZG?
Hot, moving up here in the pre-market. I mean, this is a tricky market. It is a stock picker's market. Sometimes they're going up 50, or they're going up 10, 15% on earnings. Sometimes they're going down 10, 15% on earnings. It seems like you got the luck of the draw when you report. Last night was actually okay because the market was holding up. If you're probably going to report this morning, which nobody really is, maybe it's going to be a different story. But I mean, this is just the trickiest market to play through earnings right now. It's been a coin flip. Sometimes they've been selling stocks on good reports, buying stocks on bad reports. Sometimes they're hitting stocks on bad reports. If you were even an insider getting fundamental information ahead of time, just saying hypothetically, it'd be difficult to trade that information in this environment because this has been a crapshoot earnings season, I'll call it. It's been up or it's been down and very, very hard to predict.
Don't you feel like, especially this morning, we're all just sort of, everyone's kind of sitting on their hands here. The tariffs went.
Read 20 Trump tweets this morning. So I have his Twitter account open, and in the last, no, 20. Okay, in the last, since we started our problems on the show, in the last 14 minutes, he's tweeted 3 more times. Build your products in the United States and there are no tariffs. If we bought $15 billion of agriculture from our farmers, he's tweeting the same thing again and again, just in different ways. So he's doing whatever he can. He sees the market going lower here and he's trying to tweet more and trying to almost like help the market. It's ridiculous. It's ridiculous that our president has tweeted 25 times in the last hour. So, you know, you look here, is it 20? Maybe I'm exaggerating, but it's at least a dozen tweets here. So you're looking, and obviously the first tweet was what knocked us down. We were sitting there, we were trading flat this morning and knocked us down. And the first tweet, if I just go grab it from 52 minutes ago, we've lost $500 billion a year for many years on crazy trade with China. No more. Okay, on that tweet already going down, VP is going to be interviewed. Then talks with China continue in a very congenial manner. There's absolutely no need to rush, as tariffs are now being paid to the United States by China of 25% on $250 billion worth of goods and products. These massive payments go directly to the Treasury of the U.S. And then he just continues on the tweet storm. 4 more tweets in the next 4 minutes. He's crazy on that Twitter. So, you know, you got everybody's just sitting here waiting for the next tweet. That knocked us down. So basically the entire market is dependent on what Trump is going to tweet next. This is crazy.
Yeah, and especially that they're supposed to be meeting like right now, or they were meeting late last night. They're going to meet more today, I assume, into the weekend. So I guess hold your breath for the next couple of days. I don't know how.
You can't stop. It's just driving it up. It's driving it down. The market's like a yo-yo off of Trump's Twitter feed. So it's never been more dependent on Trump's Twitter feed than it is now. He started the sell-off when he originally tweeted about, obviously, the negotiations not going well with China last Friday, or over the weekend, last Sunday. And it's continued ever since. And we're just addicted to Trump's Twitter feed right now, and for good reason. Because a tweet comes out, I'm making a trade, and putting some, positions on. Tweet comes out, we rally 20 handles. Another tweet comes out, we fall 20 handles just now. So it's all dependent on Trump's Twitter feed. And it's very difficult. I mean, we're in the middle of earnings season. We're trying to gather fundamental information about companies, and Trump can't stay off Twitter. Okay, tell us if it's going well or not. Don't keep tweeting 20 times at us. That's just going to keep the market up like a yo-yo. I seriously think he keeps tweeting here this morning because he saw the market go down his original tweet, and he doesn't want the market to go down. So he's trying to almost say stuff here, that the tariffs are good. He's trying to change the market's opinion that the tariffs are good. Tariffs are not good. The market's going to go down because of the tariffs. So, at least right now. So Trump can tweet all he wants, but if he keeps saying there's more tariffs, his market's probably not going to rally.
Yeah. I mean, that's pretty much
it's insanity to have to follow this Twitter account this much.
I know, and
Joel, you're quiet in the background.
Well, yeah, Joel's trying to get in on.
Joel's trying to get in on Zoom.
But that's what I was saying yesterday. Or the day before, whatever. I missed last week when this wasn't a thing, right? We went like a year and a half where we didn't have to pay attention to his Twitter account. And
it was out of the blue. The Sunday night tweet was out of the blue. And it took the market, obviously, by serious surprise because we fell 50 handles on that tweet. We were up at all-time highs, market doing well, a lot of stocks sitting at all-time highs, and that's what caused all this. Now, I'm not saying it's his choice of how he communicates. It's just, it doesn't seem that professional when you just keep coming out with tweets all the time. Give me an official statement, give me something, and then, sit back quietly, do your negotiations. Do you have to negotiate through Twitter? I just think it's, I think it's, weird. That's all. But, in any regard here, if you are a trader right now, you can't ignore this feed. I have one screen. This is how much Trump's important. I have 5-6 screens on me, on my trading. One screen is dedicated, auto-refreshing Donald Trump's Twitter feed, the entire screen. So, that's how important it is right now. You've got to have it up there. So you can't afford to miss a tweet. So it's sitting here on the very top of the screen. And every time I get a new one, I've got the auto refresh. You can get the auto refresh app, right on your Google Chrome, and it works well. And you just sit there and you auto refresh it, so it's coming in every 10 because the Twitter feed doesn't add.
How often are you auto refreshing? Like every minute?
Every 10 seconds.
Oh my God!
You can't do it every minute. If I get that tweet a minute late, I'm missing the trade. If I do it every 3 seconds, it's flashing too much and it's hard to read it. So 10 seconds seems to be the optimal one. So I'm auto refreshing his Twitter feed every 10 seconds, waiting for the next tweet.
Oh my gosh. All right. Well, all right. So let's move on to some stocks here. What names are you watching this morning?
We're watching everything go down here this morning because of Trump's tweet. But let's move on and just talk individual stocks. Not every stock is going down. We do have a few stocks rallying off of their earnings reports. Like I said, it's been a crapshoot earnings season. It's difficult to predict these stocks ahead of time. Some are going up 5-10%. Some are going down 5-10%. You have the same thing overnight Thursday. You got Yelp down 8%, WYNN down 5%, Zillow taking off and going up 18%. Tricky stuff.
Right. So we Joel and I broke down Zillow. Let's go to a JD.com here this morning because they had earnings. This morning here, the EPS beat and the sales beat. Q1 EPS for JD, 33 cents versus 12 cents. Sales of $18 billion versus $17.7 billion. And it's up, what is it, up 7%?
Yeah, it's getting a lift. And again, you're going to run into overhead supply here, but just to come in and say, okay, we're down and we sell everything. I mean, that did not work at all with Roku yesterday. So, we were saying it's coming up to resistance 71.72 yesterday, and it took off another 10 points. So again, random walk theory happening here in a lot of stocks. Difficult to predict the next move. I'll say, if you are putting on any trade, you can always put on any trade, but have yourself an out. If the stock starts, take up, make new highs on the year, which would be above $32, then, it gets interesting. It obviously, if you're short the thing, it gets a lot more difficult to stay short. But you are coming into resistance. You do have overhead supply at 30. You do have trade issues here. So logic would say that this gap gets faded up, but I don't know. This market's weird, man.
Okay, so it's funny that we have these technical problems today. Joel was already planning on leaving us early. I think he said he was going to leave at around 8:30 or
He's
8.
flying out at 11
Yeah,
o'clock. He's got an 11 o'clock flight to Syracuse.
Flying out to Syracuse, so he was only going to hang with us for half the show anyway. So he might not even hop on.
So we've lost him now.
Well, he may be at the airport for all we know. So whether he joins us the next few minutes is kind of his call. But we were prepared to do half the show without Joel anyway. So let's move on here.
And I'm wound up.
Yeah, you're wound up. Well,
because of Trump's Twitter feed.
Oh, I thought you were wound up because you have more energy because you took yesterday off.
I did. It was my daughter's second birthday, so I took the entire day off, and I never do that. I was watching the markets from my phone. I kept updating and watching them from my phone, which probably shouldn't do, but I'm a little bit addicted to it right now too because I want to see what's going to happen with the next action. These are big movement days, but we were all dependent on what Trump was going to say here, and we thought he was going to say something this morning. And he did, and that's why we fell, out of bed here, and that's why we're down this morning. But really, we have no new information. So negotiations, he says, kind of going well, but it sounds like these tariffs are coming in, and he's going to play hardball for a little bit longer. So until you get a deal, this market's going to remain very volatile and very choppy. So it makes it difficult. But obviously, individual stocks to talk about. We got Dropbox going up. There's a lot of individual movement.
You were auto refreshing your Robinhood app yesterday? Is that it?
What?
How were you tracking the market on your Robinhood app, right?
Twitter.
Not Robinhood. Okay.
I follow it on Twitter, and then also so you can CNBC app's good too, just to get the quick update of where the prices are. You can grab the price of any quick thing just on the CNBC app, but then I'm following along on Twitter just for any stories that I'm missing and stuff. But you can put all your stocks and you can follow it all along. So.
I thought for sure you were on the Robinhood app. All right,
not on the Robinhood app.
Since you mentioned Dropbox, we'll go to Dropbox here. DBX had earnings yesterday after the close. Q1 EPS 10 cents versus a 7-cent estimate. Sales of $385 versus $381 million for Dropbox. So
it's a big lift. It's a nice pop. Again, these earnings stocks are going to be hard. We can give you resistance. That was like 24.65. You have multiple highs right in that area. Again, it's tricky though. So if you are playing it and saying, okay, I think this resistance level is going to hold, you don't want to start seeing it go $25. So if I was playing that short, not saying I'm going to, but if I was, I would not want to see it start getting above that area. Then you start to open up and, it's pretty much wide open till $25, $26. So, these things can trade funny. Some are going to give it back. Some are not going to give it back. It's one of the most difficult earnings seasons that I've ever seen to trade. And then you throw the Trump wildcard in there and it makes everything a lot trickier. But it's all about, what is the sentiment, the day you report, how's it going? I mean, that affects it all too. Dropbox reported last night when we were up. These stocks aren't just giving it back. It's already like priced in. It priced in on an okay evening because, we you could say, yeah, we had a rough day yesterday, but really we didn't. We were rough until about 11 o'clock and then we started a rally and we ripped up 40 handles intraday. So we closed fairly strong. A lot of stocks closed in the green. A lot of stocks closed, just slightly red. So it was actually a pretty decent day for the market, despite the indices being slightly in the red. So I don't know, Dropbox. I mean, this is a random one too. It's a stock that can move significantly off of earnings. And you're seeing that this morning up 5.6%. But you're opening into resistance. So you got to be aware of that. Above 24.70, I think it opens up. And I think you could get up to 25.50 if it gets there.
Is this a hard earnings season in the sense trying to figure out the after move? So
the moves are so random. Like you come out and here you got TripAdvisor, and TripAdvisor gets the beats. I mean, absolute beats. Yes, or 2 days ago on their earnings report. Going from $56 down to almost a low of $46. Talking about a 20% move down. Then you get Booking, so you're thinking, okay, TripAdvisor's weak, so Booking, very similar business, probably going to be weak. But people are already playing it that way, and it's crowded the downside. And I had a weak day before coming back a little bit yesterday. So maybe now it's crowded on that side, so now it rallies. Give us the Booking results, the numbers. But, it's just showing you that everything's kind of going in weird directions. You can't just say, okay, well, Trip disappointed, so Booking's going to disappoint too. Because if you said that, you lost some money. BKNG.
Right. Well, the same formula still applies. Before I read the numbers, the same formula still applies where sentiment trumps guidance, trumps earnings.
It does. And especially in this market right now. So in some cases, if the guidance is weak, and in certain cases when the guidance is really bad, the stock's probably going down no matter what. But in these cases where it's kind of wishy-washy. It's sentiment that's going to trump all, or even a comment from CNBC. Like if you've got stocks and they're looking for direction and they're not really trading that much off an earnings report. If somebody comments, like a Jim Cramer or one of the people on Fast Money, and say, I really like this report, that can spark the whole rally, that one comment, because the stock is looking for direction. So it's, obviously you get a report that's really bad, stocks going down. Report that's really, really good, usually stocks going up. It's these reports that are, okay, it's kind of good or kind of bad. Those can sometimes go in different directions because it's the stock is looking for direction sometimes, and especially this earnings season, and especially when the market doesn't have any direction right now either. Everything's kind of looking for direction. So, just a comment, even from somebody it's prominent on Twitter could change that too. So people looking, for, well, which way is this, good or bad? Is it good or bad? So when it comes on CNBC, a lot of people watching that, a few 100,000 people see that comment, can move the stock. So give us the booking numbers, but that's the context behind it. Yeah. It's tricky to trade these sometimes on these ones that are kind of like, is it good or bad?
All right, BKNG Q1 adjusted EPS $11.17 versus an $11.26 estimate.
Looks like a miss.
Yeah, that's an EPS miss, and the sales number $2.837 billion versus $2.93 billion. So yeah, they missed on both.
Miss on the top, miss on the bottom. Stocks up $60. What's the guidance?
Oh, I didn't actually look. Let me see if we...
Maybe the guidance is really good. We're trying to grab fundamental tea leaves here because I didn't read the booking report. Like I said, I was off yesterday, so I'm getting caught up myself here with you guys live on the fly. But, I mean, right from so far, you would think logically thinking that the stock would go down on this. Not the case.
Did they give... I don't even know.
Yeah, they did. C's 2Q EPS 22.15 to 22.60. Analyst estimates were 22.68. Okay. So the guidance was light too. They missed on the top. They miss on the bottom, and the guidance is light. Usually that's a formula for the stock to be down 60, but because TripAdvisor was way down, they already hit booking down. They were expecting much less probably from the booking report. And all of a sudden, okay, it was only slightly bad. Let's buy it. And they buy it all the way up to 1,800. That's how wacky this earnings season has been. So you got to be thinking, okay, well, sentiment turned for this stock because it was already, expectations were low because of TripAdvisor. So you're almost, sometimes it's a good thing to be the second company reporting when somebody disappoints in the sector. But if somebody beats in the sector, now they raise expectations for you, and it's bad to be the second one reporting. So it's like it's either there's luck if you're good, if the stock that reported first in the sector reports well, you don't want to be reporting second because now you got to beat higher expectations. It's how ridiculous this market is right now. Yeah. So anyways, TripAdvisor set the bar really low. Booking kind of got over that low bar, and they rally at $60. It's ridiculous. This market's ridiculous. Yes, buy Apple. Angry day today. It's just everything seems it's tricky. It's tricky. I'm wound up. It's not really angry. I'm just wound up.
Yeah. And yesterday
I need more coffee.
No, you don't.
I don't drink coffee, but maybe I should start.
Yeah. What about GoPro here? We were joking yesterday on the desk, or the day before, whatever the stamps.com day was yesterday, which was the joke was which was a zero first. It was stamps.com or GameStop. Somebody also mentioned GoPro in that discussion, and GoPro had earnings yesterday, and wouldn't you know it, it was a good quarter for them compared to expectations. The EPS was a 7-cent loss versus a 9-cent loss estimate. Sales of $243 versus $234 million, and they raised their fiscal year adjusted profitability guidance. And
are they supposed to be profitable?
Eventually, I would imagine.
Have they ever made money?
Let's
Has
see.
GoPro ever had a profitable quarter? I can't remember one.
Let's find out. Yes, they have. They were profitable in the fourth quarter. They were profitable from 2015, 2014.
Big profitable or just like a couple cents?
No, looks like in the fiscal year 2015 they made a couple dollars.
Oh, okay.
Yeah.
And the stock, I will say, for all the GoPro bears out there, the stock has stabilized for a couple of years really here now. We've been hanging around between $4 and $8 for like the better part of 2 years. So it's actually stopped going down. So it doesn't look like a zero to me. Stocks that are going to zero when they're, go under 10, and obviously it goes from 90 to 10. It's not a superstar stock here either. But I mean, you look at $4.81 a year ago, now you're $7. At least it stopped going down. That's the good news. The bad news is this is still kind of a one-trick pony. Yes, they're trying some different stuff, but I would say it's still very speculative capital only. But you've got yourself, defined out, really. I mean, if you're looking and you're thinking the stock is, having a nice lift here, such a tough candle yesterday. I'm just looking at these candles. I mean, you ran up yesterday in the number. Now you're running up again, but now you open up. So, what's a short interest? That's another wild card in this thing. Short interest is probably high, no?
I mean,
I'm analyzing this on the fly.
Well, let me see if I can find it real fast.
Yeah.
GPRO.
There's like 33%.
Here.
You could squeeze the hell out of them here on this.
No, I don't.
I have 33.
Okay. Oh, that's actually not as high as I would have guessed, but still high.
33 is significant. So when you have a stock that's 33% short interest, anything can happen. That means those shorts, can scramble for cover. There's anybody who is short this thing, and there's obviously 33% of the float is short. You can look at it from yesterday and say, you probably got squeezed a little bit ahead of the number. Went from $6.11 at the low, obviously went in the morning when everything was selling off, to rip your face off in the afternoon. So up over 10%. Now it goes up again into the print. So you'd have short scrambling for cover. That's why on the pullbacks here, you probably find buyers. Actually, the path of least resistance is probably still higher for this, just because the short interest is so high. So I'm just trying to think as a short. And if I was short this thing, I'd be a little nervous right now. I think you have some more nervous shorts out there. You could squeeze them more, even with the market being down as much as it is.
All right. A couple minute here before we grab our guest. Dennis, why don't you run through some imbalances if there are any?
There's again, on these days, institutions are going to hold their orders close. They're going to bring in the orders right near the opening because they don't want to influence their stocks. And obviously there's just no stability in this market whatsoever here right now. So I don't see anything huge of note. GE has a sell and bounce every day. It's 89,000 shares. It started to leak here again. Let's see what it does at 10. I mean, this is going to be the big number for it. It's a big psychological number there. It tried to hold it yesterday and held up at the low of 10.02. It's 10.01 here this morning. It's trying to hold 10. If I go to the book, I would bet there's some big size there at 10 in GE. Let's go take a look. Bringing up the GE New York buck, 200,000 shares. So it's not significant for GE. It can chew through that. I don't know if it's going to do it at the open here or not, but the market is down significantly through 10. Then it starts to get a little slippery. I mean, 996 was the low there when we gapped up back on April 30th. So you get through 996, then you start to have a gap in the chart down to 974. So there is some room if you get through 996. Let's see what it does there. Do the bulls defend it? It's a big down day. We just had the CPI numbers come out. Market's starting to leak a little bit more from that as well. Can GE hold up here is a question at 996.
All right, 8:35. Let's take a break today and grab our guest, Eric Krull. He's the founder of Krull Asset Management, co-author of the Lifecycle Trade. We'll be right back in a moment here with Eric.
Okay, because I'm
All right, welcome back, everyone. Spencer Israel, joined now by Eric Krull, founder of Krull Asset Management, co-author of the Lifecycle Trade. Eric, how's it going this morning?
It's going great, Spencer. It's good to be here again.
All right, so I've got Dennis in the background, but I'm going to run with this one. I think he's busy trading. So we got a big day today, Eric. Some company called Uber is supposed to IPO. I've never really heard of them. Can you outline a little bit about what you know about this IPO, or not about what we all know about the IPO, but what should we expect from this IPO today?
Well, I'm anticipating a lot of excitement again. Similar to LYFT, I'm sure it's going to be all over the business channels. They'll probably have a dedicated little box in the corner again. It's the biggest IPO since Facebook in terms of the amount of money they want to raise, and it's just it's making a lot of headlines because we all know about the company. Many people use it all over the world. And so I'm expecting just a lot of excitement, and we'll see what happens. The market will decide where it goes. We never know where IPOs are going to go. And we can talk a little bit more about that.
Well, yeah, so you sent over a presentation here. I've got that up right now with some interesting stats and some comparisons about Uber compared to other recent IPOs. I didn't realize that they had the largest pre-IPO revenue of any company ever. So that's interesting. But as far as you note here that stocks with recent IPOs with similar losses to Uber, right? Groupon, Snap, Vonage, LYFT didn't perform great off the hop. So, I mean, are we supposed to just sell as soon as they open?
Well, I wouldn't do that. One of the things that's going on with this company that is different than the others, and we'll get to that in a future slide, is that they have priced themselves at the lower end of the range. I think they learned a lot from the LYFT IPO, and that if they come out at a valuation much higher than what the last round of venture capitalists got, that maybe it's not the right thing to do. I mean, imagine if all the venture capitalists who came in from the beginning until the last round have a huge profit at the very beginning. They have an incentive to sell and start dumping shares. Whereas in this case with Uber, they did not have a very big increase from the last round of financing. And in fact, since they priced at the lower end of the range, it looks, in relative terms, like a little bit more of a bargain. You know, like look at here at this slide you have about the largest fund of the startup prior to this IPO. Uber, we have to think big here. They have the largest amount of startup funding compared to anyone else by far at 24.7 billion. They are much bigger than LYFT, which was the largest up until this point at 4.7 billion. And in fact, if you look at that list of LYFT and Snap and Facebook and Moderna and Clearwire, Groupon, and so on, Uber has raised more venture capital than all of those combined. So we're looking at something really big. And in terms of the size of the companies, Uber is much bigger than LYFT.
Yep.
Uber had 5.2 billion rides last year. LYFT had a lot less than that. When you're looking at the total revenue, Uber is 7 times the size of LYFT in terms of revenue, 7.5 times. And, you know, it's a much larger company. Also, on the other hand, in terms of profit, they have a huge, they're burning through money like crazy. They lost 3.0 billion last year just from operations. Now, the S1 will show they actually had a profit, but that's because they took $4 billion worth of gains from their valuation of Didi, this ride-sharing service in China.
Oh, just lost Eric. Let me get him back here for a moment. But we were going there. Give me 1 second as I dial Eric back. Apologies for the delays on this. You know, it's a Freaky Friday. We'll chalk this up to the fact that markets are crazy, and so is our technology. Eric, are you with me? I apologize.
Yes.
Okay. I apologize. We got broken up there. So you're talking about the profitability that they had in their S1 that wasn't really profitability.
Right. The profitability of that showed up in the S1 is mainly because they took about $4 billion worth of one-time gains from spinning off their subsidiary for Russia and the Commonwealth of Independent States to another subsidiary, and a recognition of a valuation change and their investment in Didi in China, which is another ride-sharing service. So they lost in operations about $3 billion last year, but only made a profit because of these one-time gains.
Does the fact that there's a ton of retail interest in this IPO as compared to the majority of IPOs, does that change anything for you in terms of the action? What do you expect from the action today or in the next few weeks or few months, the fact that this is such a well-known brand?
It does a little bit. The biggest thing that I think should drive that drives my interest is that they really priced it, I would say, so much more as a bargain. They did not go up very much from the last valuation that the venture capitalists got. So that helps, I think, the most. The big interest helps, but let's talk about a couple of things with this company. Since it's coming out with a valuation of around, I think it's 82.4 billion. This is not a company that can grow 90,000% or 900 times like Amazon. I mean, if it grows 12.5 times from here, you're at $1 trillion company.
Right.
So a 20-time improvement, you put it much higher than any other company on earth at this point. So I don't think if you look at the big overall picture, that it can grow anywhere near what a Cisco did or an Amazon did, just because they're already a 10-year-old company with a lot of growth and valuation long before it ever went public.
And I'll be frank, I'm not smart enough to really understand whether this business model is actually a business model, if it's sustainable. They're kind of just, they're more diversified than Lyft, and they're throwing stuff against the wall. They got the Uber Eats, they've got the other business lines besides just the ride sharing. But is this business model sustainable, do you think?
Well, I think until they prove they can make a profit on the rides, I don't know if it is. 80% of their revenue comes from Uber rides, 20%, 13% from Uber Eats, 3% from Uber Freight, which I think has the most promise, and then like 3% from other. So they have to make money on the core business of ride sharing. And right now, their biggest problem is they have competition. There's taxis, and the main thing is Lyft. And Lyft and Uber are trying to compete on price. And when you have that, it's hard to start turning a profit. They lose only $1 a ride, and which is less than Lyft, but they still have to start making money per ride.
All right, what can we learn? I've got the chart up here of the 8 of the largest recent IPOs. What can we learn from the trading action from these names, from Lyft and Zoom, Pinterest, Eventbrite, Beyond Meat, et cetera? What can we learn from them as far as what to expect later today?
I think the main reason I want people to see this is most IPOs do not go straight up. You can look at them. Sometimes they have a pop in the first week or two, and then they start to correct. But once it hits the street, you do not get such large gains from the first day close, let's say. And let's face it, most people, when they talk about like what happened with Zoom Media, the big lift was from the night prior when retail investors can't get the shares until it actually goes public. There was a huge, like 75% gain before it finally hit the opening price. After that, Zoom hasn't gone up very much. I think I have a slide that shows what they've done since day one, a couple slides ahead. But the main thing is we are early in the life cycle of these charts. You have plenty of time. You don't have to get in right away. And just kind of watch how these stocks form their chart patterns and wait for a consolidation.
What about Beyond Meat here? I mean, the performance of this thing has just been unbelievable. Do you have any insights into why?
There it is. It's crazy, right? Beyond Me shown there in that orange line. It looks like it's beyond. It looks like a huge run up at first, right? But that was a lot of it was from the brand opening price until the first day close. It's gone up very little since then. And most people can't just say I'm buying opening price and then take a chance, because most stocks don't act like Beyond Me. I mean, even look at the stock there. I forget, Jumia. That one is the I guess they've been considered some of them to be like the Amazon of Africa. it also had a huge gain and is giving up most of it back. So retail investors have to be careful that, unless you catch a kind of a lucky star here and you grab the opening price and you get something like a Beyond Meat, the vast majority of people are going to get a price that doesn't change much in the first 2, 3, 4 weeks.
And what about, didn't they say yesterday that the Uber they had an over allotment, that the book runners were going to over allot, and so they're going to introduce more shares? Did I read that correctly?
Yes, I mean, it's usually when something's oversubscribed, which is a good sign for like day one. You want to hear about the stock being oversubscribed. That happened to LYFT. LYFT was oversubscribed 3 times. It came out high, and then it just started to fall. So it's not necessarily an indication that to guarantee it will be great on day one, but it's a good thing. You want to hear oversubscribed versus undersubscribed, and you want to hear about, they want to maybe release more shares in the allotment because there's such a high demand. But again, I think the biggest thing that helps Uber in this case is they've somewhat conservatively priced the offering, and that, I think that's the biggest change. They were looking to go out at 120 to 130 billion dollars valuation just a few months ago before LYFT came out, and now you're valuating it at 82.6 billion. I think that's the thing that'll help it stabilize the most. I don't know where it's going to go. I want to see them have a quarter or two of profitability. And I also, in terms of my opinion, I would rather wait, see a base form, and then maybe go from there. But I'm not a buyer on day one. I wouldn't encourage somebody else either.
And we also have, more unicorns sort of watching this one this morning. We have Slack, which is rumored to be doing a direct listing in a month or so. We have Postmates. They're reportedly both watching this one to gauge appetite for IPOs in June and July, respectively. So this is going to go a long way in setting the tone for the IPOs that we see later this year. Do you expect, I guess, what do you expect this, how do you expect this to impact the IPO climate as we get through the year?
I agree with you that this will have an impact. I think LYFT had a really big impact. I think it really changed where Uber was coming out with their pricing. And if this one doesn't do well, it's going to be a major problem for the future IPOs. But however, again, Lyft and Uber are not money makers. I don't know much about Slack in terms of their profitability. I think it just goes to show if Uber doesn't do well, you really have to have some path of profitability that seems to be available quickly. I mean, because Uber, I think they're looking at another 2 to 3 years of losses. So they say they want to expand to more countries and keep doing more things. And there's no profit in sight yet.
All right. Eric Krull is the manager and founder of Krull Asset Management, co-author of the Lifecycle trade. He has joined us for at least the past couple of major IPOs. We appreciate the insight. Eric Krull, thank you so much.
Oh, Spencer, thanks. It was great to be with you, and look forward to the next time.
All right. Thanks a lot, Eric. 8:51 here. Let me see. Dennis, are you back?
Yes. Can you hear me?
Yeah. Are you trading?
Yeah, they've got a deal. IFM to buy Buckeye Partners and $6.5 billion equity value deal. Just trying to grab. So BPL, it looks like deal is all cash, and it looks like it is 40. Just trying to grab the price. Do you have it in front of you?
Whoa. Just saw that spike. What do I see? I see 41.50.
Yeah. And it's trading up at $41. So big pop here for BPL. Watch, obviously, the other ones could be moving here too. Tons of these to think about out there. So you could see some sympathy moves here too. BPL, if there's ETFs that are out there, there's not a lot that own this, obviously. There's not a lot of big, MLPs here, but let's just go grab a couple of them. Just doing this on the fly too.
ETF.com is a great tool.
I'm there right now. I'm already there. So if you look at BPL and you're just trying to look at what ETFs and other stocks are in there, and I don't know why, but my internet is just crawling. It's probably because I'm trying to run too many things on these computers that I wasn't normally running. MLPA is the one that holds almost the most. It's the most liquid of it. It's got a bunch of other ones in there too, but I don't know if this kicks off the MLPs or not, but think about that today. I mean, the oil is trading up here too, so anybody who's got some MLPs is going to be making some money, at least BPL.
You're already seeing ENB. You're seeing EP. Well, not EPD. ENB is trading up here. What about TRP? Anything? No, not a lot. So just ENB is the big one that I see trading up here in reaction to this. But
it's early. It just happened 3-4 minutes ago, and we got a big down day, so that's the wild card. So is it, our sympathy player is going to come in and start buying these things up on a day that we're down 15 handles? It's hard to say. So but that's where we're at. So EPD. I mean, if you look at the MLPA, there's a ton of them in there, and obviously, you really got to break it down, and who is exactly like BPL. I don't know, but there's just a ton of them in there. There's Williams. There's, Magellan, there's Energy Transfer, there's Western Gas Partners. There's just a ton of them there. So go through the list. Just be cautious you're trading in these things, because some of them are probably going to get a pop on this news. Like you said, you can already see Enbridge lifting here in the pre-market. So ENB would be one to think about. But Enbridge did Enbridge report? Because it was already up before this deal.
Oh.
Maybe. I just wonder if Enbridge had other news, because Enbridge was trading up at 7 o'clock this morning.
Oh, they did. They did report.
Yeah. So it's on its own news right now, but just keep an eye on the MLPs, because this could, obviously could get some sympathy moves here in some of the sector.
All right, let's go to the biggest loser of the morning, at least on my scanner, and that is Puma Bio, PBYI. They not only did they have earnings yesterday, the earnings are kind of irrelevant out here, because they reported in their statement. They said that sales of Nerlynx, which is their breast cancer drug, sales are declined last quarter due to an increase in patients discontinuing treatment, not because the drug is working. They're just discontinuing treatment. So the earnings at this point are kind of out the window. The fact that that's a major selling point for them. For what it's worth, the EPS beat and the sales beat, but they're getting downgraded here.
Low of the move back in October was 1760. We have not been that low in the pre-market. That's where I would keep an eye on. When you come down this far, you almost think it might test it. So if you're buying at 1930, you might be early. Maybe we're going to get the test of that 1760 area. What does it do there? That's the question. Does it hold 1760 or not? I've lost a lot of money trying to buy biotech stocks on bad drug news. So these moves can really get extended sometimes. So just because the stock down 35% doesn't mean it necessarily has to bounce. Sometimes they continue to go down. Think about the people, a completely different sector, but think about the people who were trying to call the bottom in stamps yesterday. We warned you about that on the show. The stock was trading around $44 in the pre-market, and we were saying, hey, these things can get really ugly here, and it did. It continued to go lower and lost another $7, and actually lost another $9 before it did bounce a couple points at the end of the day. But you got to be careful trying to call the bottoms, especially on the small biotech, because those things sometimes don't like to bottom very quickly.
Yep. All right. 5 minutes left here. Let's run through some ratings. I didn't see a ton of that interested me. There was that Citi note where what do they do today? They upgraded every healthcare provider.
I don't know. It's a big note here. Anthem, they upgrade. Centene, they upgrade, which is CNC. They also upgrade UNH. So big upgrades to all those stocks in the sector. They would be up a lot more if not for the market. Centene's only trading up 30 cents. Anthem's only trading up 1% there, and UNH is only trading up 0.68%. So they're not up much because the overall market is weighing them down. But if the market goes to reverse today, these are the stocks that usually get bought first. So, to keep an eye on the market, if you start to see some buyers come in, these three stocks could start to get some life because they did get upgraded here today. You also have a big upgrade of Ford too.
Yeah, Bank of America upgrading Ford to buy this morning.
Yeah, that's a big note. Ford kind of had a little washout yesterday, down to 10.07, closed 10.20. It's trading up at 10.32. I will say there's just so much overhead supply and resistance at 10.50. So until you can get above 10.50, it's a little bit tricky. So you're going to open up into resistance here. Just a ton of stock up there, probably even a lot more than shows up in the book. Like I can see 400,000 shares in the book at 10.50 with another 120 at 10.51. So call that whole area 10.50, 10.51 major resistance. Resistance is resistance until it's broken. Maybe this is a note that can get us up towards it, and maybe something else can kickstart us through it. But, GM did roll over there yesterday, which is not good for Ford either. So let's see what it does at 10.50. If it can hold, if it can get above 10.50, then it starts to get interesting. But until it gets above 10.50, hard to be a buyer.
All right. We know you don't trade IPOs really, but are you going to be trading LYFT when Uber? I think Uber is supposed to open around the open.
Well, that's something to think about. And Uber, they try to open up. It's going to be $45 is the IPO price. So who knows where this thing opens, 60, 70,
60,
who knows? You
70,
don't know.
80, 90, whatever.
It could open anywhere. So, you don't know how excited everybody's going to be. I don't think it's going to be an 80 or a 90 because everybody will be a little bit nervous about LYFT. I think you're going to be probably like, in the 60s. I'm just guessing, but in these things, anything can happen. But we obviously saw significant selling come into the LYFT. LYFT made new lows as of yesterday, even or the day before. It did take out those lows. So you will see some movement off of this. So if you're trading, LYFT, keep an eye on Uber the entire time it's open because if Uber starts to really rally, maybe they lifted that too. But now you've got a direct play. Going forward, I'll be excited to trade these two stocks with each other.
I was going to say today.
It's tricky as a pair trader on day one because Uber is just going to be wild.
Yeah.
So, once the dust settles, let's say 3-4 weeks from now, you start to get a feel from, both stocks. It starts to get some technical, some charts to look at. Then these two stocks are probably going to be a nice pair trade. So I will probably be pair trading these stocks quite a bit once the dust settles. Hard to do it on day one.
Yeah, I'm sure you can't wait to do that. All right, a couple more minutes. Let's see here. We only hit on a couple earnings today. You want to do one or two more? Let's do. Any preference on the earnings, Dennis?
No, you can go anywhere. Yelp's weak, Zillow's hot.
Yeah,
we did booking already.
Well, let's take a look at Yelp. Yelp, the EPS beat by a penny, 2 cents versus 1 cent. Sales of $236 versus $235 million. So essentially in line on the first quarter stuff there. They also reiterated their fiscal year revenue guidance of 8 to 10% year over year.
Had an impressive run up late April. That's entirely gone just like that. Boom, gone. So, that's the risk of holding stocks through earnings. Sometimes they can really move, and this one's moving to the downside here. I would say you had resistance at 36 for the better part of, the entire first half of April. Finally broke out of that. We always say old resistance can become new support. So I wouldn't be surprised if we find some initial buyers in that 36 area. What's the pre-market low, though? That always changes things, too. I wasn't trading last night, so I wasn't looking at this stuff. Can you see the pre-market low there, Spencer? Ballpark it.
35.51.
Okay, that's in the ballpark, 35 to 36. So I think you find some buyers at 36 area again. We'll see what happens. Obviously, if it starts to slippery slope its way through there and gets under 35, then all bets are out. Then the next support isn't really till 34. So if you subscribe to the theory, old resistance becomes new support. Maybe you get some buyers at 36.
Have you ever left a Yelp comment or review?
No. Have you?
I did once, but I only did it because I thought it was anonymous, and it wasn't because it was linked to my Facebook account. But it was a positive review, but I didn't want anyone to see it regardless. So when I
what did you review on?
Oh, I don't remember. It was like a few years ago. It was something they had went out of their way to do something nice for me when I was there or something. I don't know, making a combination of some kind. So I left a positive review, and because I signed in with my Facebook account, it posted to Facebook automatically. I didn't realize that, and I was very embarrassed. Even though it was like a positive, there's nothing bad about it. I was just embarrassed that people saw that, so I was like, not doing that anymore.
Anonymous comments, not anonymous sometimes. You gotta be careful.
Right. The only reason I did it is because I thought it was anonymous, and so that's the last time I leave a Yelp review. Apparently, I don't know people who do that, but that's life. So, all right, that'll wrap it for our show today. Joel will be back with us on Monday. Thank you to our guest today, Eric Krull. Thanks all of you who bared with us, both in our chats and otherwise. Do want to remind you that myself, Joel, and Dennis will be at the Benzinga Trading Summit June 20th in New York City. Tickets are available at bzprofit.com. Joel and Dennis specifically will be hanging out in the Trader Lounge with some other guests we've had on our show, Jeremy Newsom, Anne-Marie Band, Christian Fromhertz. So that'll be, again, bzprofit.com. The promo code to get a 15% off discount is PMP15. So again, bzprofit.com, promo code PMP15. Please remember that all the information on our show is for informational purposes only and not meant to be investment advice. Hope you all have a good rest of your day. Good luck, all you traders out there. Hope you have a good weekend. We will see you on Monday.